To finance now, and the Australian dollar fell sharply after the economic growth figures came out, and it's now at its lowest level in 2 months. Here's Alan Kohler.
In fact, the Aussie dollar fell twice today, once when the national accounts were released at 11:30 and again 2 hours later, for reasons unknown. I can only assume that that's when the number crunchers emerged from their lairs, looking grim and haggard, and revealed to foreign exchange traders the full wretchedness of December quarter GDP. So what was it? Well, first, the economy was rescued by government spending or public demand, which contributed 0.4 of the 0.2%. That is, the rest of the economy, the capitalist economy, shrank, dragged down by housing and net exports. And the other rescuer was population growth. Now, as you've heard, we've now had 2 quarters in a row of per capita GDP contraction, which is the definition of recession. Real GDP went up 0.5% in those 2 quarters, so population boosted GDP by 1%. Without it, recession. And yes, we have graphs of that. Here's the change in real quarterly GDP, right back to 1975. Not many dips below zero, and the average per quarter over the past 10 years is plus 0.6%. And here it is per capita. Now, there's a lot more time spent below zero, and the average of the past 10 years, after immigration was doubled in 2006, is 0.3%, half the average reported GDP growth. And finally, a chart from the speech by Reserve Bank Governor Philip Lowe this morning. It's foreign investment in Australian houses. Picture, 1,000 words. The dollar is sitting at 70.3 US cents, as close to the 60s as it's been for 2 months. The share market popped up 0.7%, and the biggest gains among the 50 leaders were Qantas, Newcrest, Origin and Cochlear. And global markets mostly fell a bit, apart from China, again, boosted by the approaching trade deal. And that's finance.